Good afternoon, ladies and gentlemen. I am JC Peretz. I am the founder of All Star Charts, and I couldn't be happier today to talk about one of my favorite subjects with the man, Mr. Jeff Macke. Jeff, say hi to the folks.
Hi, folks. How you doing today? Probably not that great. It was not a great day in Consumerville, JC, but that's why we're here. We're here to help people kind of avoid losses, make a little cash.
I got to tell you something. There's a few things, a few reasons I love the consumer. Number one, the products and services themselves, the companies, I understand. They sell pizza, they sell sneakers, they sell yoga pants. Like, it's not like some like random drug for some, cancer that I've never heard of. Like, I don't, this is very simple for me to understand, number one. Number two, to your point about sort of, the selling and some of the consumer stocks, it's always going to be like that. There's always going to be names in the consumer that are getting hit. And by the way, there's always going to be names in the consumer that are doing well. That has stood the test of time. So this is a subject that is, really near and dear to my heart as an investor and a consumer, right? 2 for 2 there. So Jeff, am I thinking about it right?
Oh, you're thinking about it exactly right. And that's the way I've thought about it my whole life and kind of how I got into this game. I grew up in retail. As you know, my dad was a Target exec and he really taught me the world backwards. So I see businesses kind of backwards from the end consumer. Are they meeting the needs? Are they going a little additional step? And that's going to show you what a good company is doing and what a less good company is doing. And as you say, the signs are all around us. You go to get a coffee. Where do Americans go more than Starbucks? There's 40,000 Starbucks, JC. That company's in the middle of a dramatic turnaround. What better way to kill your time? And this line at Starbucks is noticing that maybe that line's not as long as it used to be. Maybe that's an opportunity buried in there. That's the kind of evidence that you see everywhere. I see it every place I look. And frankly, that's kind of how I make my living, is just paying attention to where I am and figuring out the trends from there.
Guys, we'll get into a little bit more about Jeff Macke and sort of his experiences and, how he thinks about the overall market. But I can tell you for a fact that you are in for quite the treat. Many of you listening here and watching know who Jeff Macke is. Like, you already know. Of course, Jeff is the guy. Yeah, of course. Everybody knows. But if you don't know that, like, Jeff has like a cult following. People love Jeff Macke. And by the way, well-deserved. Jeff has been around for a very, very long time. Jeff was around in Minionville. Like, you have been around the block. You look great, by the way.
Thank you. I'm feeling great. I was an AOL guy. I was AOL when they had those dial-up tones that probably someone your age has never actually heard. When it was a modem thing, I was MF Stores for the Motley Fool guys. I've been writing about stocks for 30 years, been doing this for a living for just about as long, kind of looking to pass it forward a little bit.
No, I love it. That is old school. When I tell people that, they're like, really? I'm like, yeah. All right, so let's get into what we're going to talk about today. We'll get a little bit more into Jeff. So, a lot of people know you, but maybe they might not know everything about you and really where the magic comes from. In addition to that, we're going to talk about some of the trades that you've been making and how you think through that and why you were able to make, in some cases, 1,000% returns in a particular trade. We want to think about the process, right? It doesn't just happen overnight. There's a system there. And we're going to talk about the current opportunity in retail. As far as I'm concerned, there's always an opportunity, right? Some way, somehow. But obviously with tariffs and a lot of the rotation that we're seeing among consumer stocks, like, I really want to focus on that part with you guys. If you're listening out there and you're wondering, you're like, hey, these tariffs, how are they going to impact the consumer stocks and most of the stocks that we think about and trade? Well, Jeff's got the answer, and he's got a pretty damn good answer too, I got to tell you. And then we're going to move on to, what we like to call the Macke advantage, which is really getting back, to that process. So, Jeff, let's take a step back for a second and talk a little bit about, how we got here, right? How did Jeff Macke become the best consumer analyst that there is, right? Like, how did we get here?
Overnight and over the period of about 55 years, JC. I grew up, again, as I said, in Target stores, kind of going to Targets the way a lot of guys played catch with their old man. My dad and I would go into Targets and we tour the stores. And he would point out in no uncertain terms, this is what's working, this is what's not working. This is what works for the consumers, is why we have these rules. He would berate store managers from there. I just kind of carried that knowledge forward. After college, I went to work for Macy's. I was one of the last generation to actually work in a shoe department of Macy's and put shoes on men's feet, JC. If you want to get to know a business, it's really, really hard to learn a business more intimately than you do the shoe industry if you're
Dude, you're
sliding
Al
shoes
Bundy.
on
You were
men's
Al
feet.
Bundy, right?
I was Al Bundy, man. Let me, I did only the men's department. When the boys come in, you always bring them in one size a little bigger than they ask. The boys always pretend like their feet are much larger. A little inside tip for you in case it get down to it. Anyway, it's just been this comprehensive process. I've worked for Kmart, for Sears as a consultant. So I've seen kind of the disasters. I grew up in Target, as I said. I've been all around the world on these things. I've been picking the stocks and kind of following the trends. As you say, one company gathers what another one spills all the time in retail. And what I like about it from the consumption side, from the analysis side, is that you've taken a lot of the variables out. Retail itself is going to grow kind of with the number of people on earth. It's just a matter of how they're allocating their cash. And right now, to a point that you alluded to, with this tariff world, people are tightening up their belts a little bit, and it's blowing hard on some of these consumer stocks. And that's why a nice little balanced portfolio can help people out.
I really like the uncorrelated nature of this beast. There's always winners and losers no matter what. It could be the best bull market ever. There's going to be consumer stocks that are getting slaughtered, right? Because nobody wants those jeans anymore or whatever. And at the same time, in rough markets, there are consumer stocks that are going to do very, very well. Even if it's a Dollar General or grocery stores or whatever it is, there are names that are working and they're coming out in these universes. Guys, for those who don't know, Mr. Jeff Macke, original cast member of CNBC Fast Money back in like 2007 or something? 2006?
Oh boy, we started making that show in about 2003 or 2004.
Wow.
I flew back and forth from the West Coast, making that show, trying to figure out a way to explain stocks to people, come up with just ways to talk to folks to get the message out there. At the time, there weren't a million podcasts. There weren't guys like you out there broadcasting. That's why I have that cult following, is because all you guys grew up. And people used to watch me in college when I was trying to explain what was going on with the great financial crisis, which, by the way, was akin to going on TV every single night and telling America that their dog just got run over by a truck. It was an absolute nightmare, but this is not my first rodeo. Whatever happens with the tariffs, with everything else, I've seen worse crises, and I've been on the Today Show trying to explain them. So after a while, you just kind of develop experience, and you've seen all life's pitches. You're an old baseball guy. There's only so many pitches life can throw at you. And once you've seen the heater and the curves, well, then you can kind of dig into the box and kind of deal with whatever comes down the way.
I couldn't agree more. We're going to get into the Etsy trade now, but Jeff, I spoke at Fordham University last night, as a matter of fact, and I was telling, the kids exactly what you just described. Like, I've seen all these cycles. Like, people think that this is crazy volatility and the market is nuts. I'm like, you think this is nuts? This is nothing. This is like, we beat up kids like this on the way to a fight. You know what I mean? Like, this is like, this is a joke, this volatility. You think this is... Right. So I
was literally booked the day after they invented TARP during the great financial crisis. I was on the Today Show right ahead of these puppies. They had rescue puppies, I kid you not, immediately after us. And so they ran this little kind of segment about a guy who was losing his home. And then they let in with TARP. The whole time I'm staring at these puppies playing with each other. And then they're like, Jeff, how can people really relax and realize that they're not going to lose their homes? I'm sorry, America, things aren't that great. I haven't had time to read the 9,000-page document. I'll get back to it just as I can.
Folks, if you're listening out there, like, this is real life. Like, this is real life. And as somebody who's seen as many cycles as I have, it's the same thing. Like, the world's falling apart over here, and I'm on vacation in Italy with my family. Like, this is true story. And I'm like trying to explain to my family, like, the world's completely falling apart. And they're like, shut up, JC. Like, guys, this is, and going through these experiences is really helpful as we navigate current markets and future markets, because it's like, oh yeah, this, you start to get a feel for things. You start to get numb for it, and you weigh all of the evidence. You move on to the next day, you continue to weigh the evidence, and that what's happening today is not going to be like, oh my God, this whole thing. There's going to be other stuff in the horizon. And what I love about the consumer is that there's always opportunities, no matter what. Boring markets, crazy markets, anything in between. So I want to get into some of the trades, Jeff, right? You have all of this experience, you have all of these knowledge. Now let's focus on the market side of it. That's where I come in, right? I mean, I love all this stuff, and I think it's cool. Like, this company makes cheeseburgers and their pizza sucks, but they make how much money, right? Domino's is, how did they do better? They outperformed Google for so long. Like, wait, what? right? Like that's cool. Let's talk about the money aspect of it. Walk me through this Etsy trade, because these are ridiculous returns, by the way, like 1,000% almost on Etsy. Like, what were you seeing? What was the reason behind all this?
A craft company. This really ties in where experience, a little bit of knowledge, and a little bit of luck all can kind of they come together. They fuse when things are working beautifully. I had talked to Etsy as part of my work at Yahoo Finance at the time, and they were going to go public. And so they were doing a big financial interview, and I'm talking to them, and it's like, you got a nice little co-op there for people who make dream weavers and they sell them online, or pillowcases and, t-shirts, what have you. But you're kind of a communist. I'm thinking to this thing. So, you clearly hate capitalism, but this would be a neat company if it was run by capitalists, but you're not. So I kind of backfiled it. That was about 2013. 2017, they get a new sheriff. Turns out that in fact, being a hippie commune for people to sell dream weavers was not a good business by itself. You needed some capitalists in charge. They hired a guy that I knew from business school who had founded Evite, sharp new manager. Man, JC, you give me a consumer stock turnaround that has kind of a simple mission statement. In this case, let's be capitalists. Let's turn our business into a profitable retail center instead of a co-op. And you can make a lot of money off that. So I started getting long that stock back in 2017 at about 13.50, just on the fact that I knew a smart guy was coming in, which is, it sounds simple, but if you don't have the backstory, if you don't have kind of that dearth of information, if you haven't been fed sort of all the inputs that are going on, it's not as obvious as it seems. But once you kind of know the cast of characters, that's why I pay attention to management, the fundamentals, and the technicals, and that gets you along the stocks. In the case of Etsy, it was a great investment, and then COVID hit, and it went hyper, supersonic, Nova, beyond what any good manager or anyone else could expect, because it was all part of that COVID pulling demand forward type of thing. Next thing you know, your little craft company that I thought maybe my buddy could get me a double or a triple out of, well, that's a 10-bagger. And at that point, it's just a matter of reminding yourself over and over again that you never fall in love with consumer stocks forever. You trade them. Things come in and out of favor, and it's just a matter of getting out of there live and not fall in love with your own cooking.
And again, it's always been that way, Jeff, right? Like, are you guys listening out there? Like, what he's saying is just, it's always been that way. It's always going to be that way. These consumer trends, right? Because it's not like a stock market. It's not like an oil and gas trend. These are consumer trends. So it's behavior. We're not just analyzing the behavior of the market. We're analyzing the behavior of humans. It's just that Jeff is way better at doing that than I am. So I stick to the market behavior more so. And Jeff is watching what the people are doing, right?
I'm a psych major, man. I came at finance backwards. And so, nothing ever changes. People never change. They just adapt and adjust to kind of what's coming down the pike next. But, your parents, I'm sure your mom said the same thing. You should have never thrown out that chiffon dress, because everything comes back in fashion if you just hold on to it long enough.
She does
ask
say
anyone
that.
who's chucked a brand new pair of Air Jordans in the last 35 years. Like, it turns out I should have held on to those because they're worth 500 grand now. Freaking my Air Jordans. It's things cycle, they come back. You never forget entirely about these companies, but something like Etsy, when you get those returns, when you get a 10-bagger out of that, it's time to kind of, move on with your life. You think of them as ex-lovers. You want to think of them fondly and not all that often, but you stay in touch. You just gotta check in on their lives.
I love the different types of stocks, right? Because the consumer, when you think about the consumer, it's not just, jeans and sneakers, but like you're thinking about other types of names that the consumers use that might be considered software or industrials, like an Uber or like Google or like Apple or things like that are technology companies, but they're the consumer. This one's so traditional. Abercrombie and Fitch goes back forever. I remember like in the malls and like, people with their shirts off. And like, I think my wife says she worked there back in the day, and like they couldn't wear like perfume or something like that. That was like a big thing. And like,
they spritz people. They spritz people. They couldn't wear their own perfume because the Abercrombie would spritz people when they came in. And there's actually kind of a quiet little support group of people about your age who spent some of their teen years working at Abercrombie and Fitch, and their primary jobs were to wear sweatpants and be shirtless. Like, basically half the swim team on the best high school that you knew at the nice mall was doing that right around the turn of the century. They were all working at Abercrombie and Fitch, and it was that creepy of a store, but it was unbelievably smoking hot, and then all but disappeared. Well, then it became a pretty good stock again. Never went away, most of these things, they disappear. You don't see a lot of Benettons around there. You don't see all that many J. Crew stores, even though they exist. But some of these companies like Gap, like Abercrombie, they just kind of turn up over and over again because they've got a pretty good franchise, pretty good brand. They saved themselves. I frankly didn't think they'd be able to, but they went from that sort of creepy vibe, spritzing everybody with cologne, not even sure you're going to be able to get the stink out of the store base, to becoming a 10 bagger. And it wasn't just because COVID, it was because they just managed to lever their business model. They caught a couple nice trends and the stock just exploded, and deservedly so. Now the stock is just in a free fall, because everything that rises must kind of fall away. You don't see charts like that in nature, JC, as you know, something that rises that parabolic. It's going to roll over at some point. It's trying to find a bottom now. But as the momentum was building and as you're staying, again, we talked about managers before. Another thing that I love are trends. And what Abercrombie was able to do quarter after quarter for about 3 years was just continue to have comp store gains. And they did it by selling clothes to kids and their parents. You walk into a store, any type of chain, and Abercrombie pulled it off. They're selling retro T-shirts that I might have worn to high school. I'm in there with my kid buying, hey, son, look at this, a Snoop Dogg shirt. He doesn't know Snoop Dogg from Jack, but he's like, oh, that's a kind of a cool shirt. And so we both walk out of there with a nice T-shirt. That's a really good deal for a specialty store. No chain stays that hot forever, but when they do, this is the kind of chart that you end up getting. And then, as we talked about before, it's just a matter of controlling your emotions and getting out of their stocks, not getting trapped in the tax game of, I don't want to take my gains. And just realizing that the parade goes by and you can find another opportunity elsewhere.
Yeah. Yep. So you're recognizing the opportunity in the dynamics of what's going on at the company and the management for that matter. And then you're using the technicals for the entry point, and then you're scaling out eventually along the way, essentially, right?
And we wrote about it, and that's kind of why I'm here, JC, is we talked about their stock going into their earnings this week when they reported and said, frankly, you just got to run away. There's nothing they can say. At some point, they've declared victory over the last couple of quarters. There was nothing they could say, not in a tariff market like this. It's not in a market where they put up 20% comps 3 years in a row. These trees don't go to the sky, as they always say, and so ultimately the growth is going to slow, and it's going to slow at a pretty high level, but that trend is reversed. People went out of the stock. Stocks, it's the confluence of where the fundamentals meet the narrative, meet the technicals. And right now, your narrative here is a slowing growth story, and people are going to sell that all day in a tariff world.
Now, let's remember, this comes after 1,000% return. So nice trade there, Jeff.
Nothing but love. As I said, they're ex-lovers, JC. These are I would never say
he's like, yeah, they'll get their act
Abercrombie.
together one day. Not my problem.
I wish it the best. I wish it just all the best and all the happiness in the world.
That's right. Well done, sir. Well done. All right, 1,000% return on that. Now, this one is WWE, right? Owned by TKO. What else do they own? Is it just a...
They own UFC and they own WWE.
Got it.
Which is just tremendous. So where are they going with that? Well, they're selling live events to streaming services. So, while people are playing the Netflix, I want to belong where the content is being made. Now, that doesn't mean studios anymore. Studios are a lousy business because there's plenty of lousy movies out there. But what's selling is live content. The NFL, you saw that package go to Amazon. You saw Netflix buying the WWE. It's only going to be a matter of time before they get the ultimate fighting going on Netflix or these different streaming services who can't overpay for it. They're paying tons of money. And it turns out TKO Holdings, they're a spinoff of an agency, Creative Arts, or the Ari Emanuel's agency. So, this becomes a proxy, a way to play these rising bids, the bidding war that you get for WWE content, for anything live, anything that can create an event. I don't know if you've seen that TGL where it's a bunch of professional golfers hitting things into a screen. They're actually getting paid to produce that. It's not even practice for these guys. It's a bunch of guys hanging out in this glorified garage. They're getting paid just because it's live, just because people will be on the Twitter sphere talking about it, and that makes the ads worth a lot more. The streaming services can't overpay. TKO gets a little chunk every time that happens. That's turned into just a great investment, almost because they're just the space, the involvement, the area that they're in right now it's unbelievably hot. It's just absolutely perfect for them. It won't last forever. We'll get tired of kind of the new streaming opportunities, the live stuff on these networks. But for now, this is terrific. And so you have that combination. They're able to add a lot of synergy just by taking a little bit of the creepiness out of WWE, a little bit of the history of human cockfighting out of the UFC, kind of classing it up a little bit, and all of a sudden you have some nice Netflix PG-13 content.
Well done. Close to a double on the TKO there. Nice job. 1,000% return. Close to on the other two. So I think that, if you're listening out there to sort of the thought process, right? You're thinking about the opportunity, and these are very different things. We're talking about like streaming wrestling, and we're talking about Etsy, right? I mean, these are all kinds, shoe companies, all different kinds of things. And that's why I want to take a step back for 1 second and talk about how big the consumer is, right? There are so many things. Is this 70% number that, the economists tell us, is that accurate? I feel like it's probably even more than that, no?
I mean, it's you throw food in there, JC, and what do people buy under any economic circumstances? Well, they buy food, and so it's pretty much about 70 cents out of every buck that flows through this economy is going to end up being part of the consumer package. It's going to be part of either bought, consumed, spent on by somebody out there going to be driving that action. And so it's a huge part of the economy. It's an enormous part of just how people behave. And it's kind of underanalyzed as a stock sector. We all want the next shiny tech thing that's going to blow everyone's doors off. But the real money's getting made in companies like this, companies where the expectations maybe don't match up with the reality. I'm seeing Gap come across the wires. We wrote about that the other day. It's up a cool 15%. Life is okay. All of a sudden, today's not so bad. But it's you didn't need to be a brain scientist, rocket scientist to figure it out. You just needed to put together a lot of pieces and spend a lot of time kind of understanding how these consumer world intersects and how that relationship between Wall Street and everyday investors, how that really works down in the pits, down in where stock get bought and sold.
And this is important, and I want you guys to focus on this. This is like, of anything that we talk about here, like all day, like, I think this is the most important part to me. Jeff, can you explain to everybody, please, the dispersion amongst the returns from these consumer stocks, from massive winners that make your year by a long shot, and the opposite, right? Consumer stocks that just lose 80-90% of their value, and that's always happening. Like, to me, that's the most interesting part of all of this.
These companies, you never want them to get too hot. You never want to, we saw this with Target. You can throw, at Peloton, it happened with Chewy, it happened with all the COVID names. They just got so hot and they were going to go to the sky. And all of a sudden you had these companies. Peloton was an exercise bike company with an iPad on it. And it was valued at $50 billion at one point. That's a lot. That's going to come back, and so it's really a manifestation of pure mania. And part of that is unique to these consumer stocks because people do understand and people see them and they develop that kind of reputational buzz. And there's no place to go but down once you're everybody's favorite store in the case of Target. Once Target became kind of comfort food for everybody during COVID. They were the cleanest, nicest place you could go. Target. Oh, man, I can't stop cringing. They called themselves Target. You never call yourself by your own nickname, JC. You never do that. And Target went about doing that for about 90 straight minutes in their conference call. I was cringing the whole time, but as an investment thesis, kept me out of Target, which worked out just fine.
Worked out just fine for you.
Yeah. You want to be on the other side of anybody using their own nickname.
All right. So a big thing that's happening right now that we have to talk about, and you yourself were like, JC, we have to talk about this. What's going on with the tariffs is above my pay grade. Like, this is not where I live. If you're listening out there, you probably have seen me talk about the market and show. I look at price action. I don't know anything about tariffs. I don't know anything about the, government and politics and stuff like that. But Jeff, from a consumer standpoint, how should we be thinking about it? Like with anything, there are winners and losers. So how should we think about finding the winners and also finding the losers for that matter, right? So that we could profit from it.
As long as this exists as a factor, people forget that we had the same guy as president 4 years ago. So I'm not sure why people are shocked. But if you look at some of the price action we saw, particularly in consumer discretionary during the last Trump administration, the tariffs are just a killer. You just got to get out of the way. And what I'm looking for when I see this endless flow of news is, I want the companies in my long side of my book I want to be long them. And I don't really care about the price being, if it's down 15%, I'd buy more. I want to make sure that that's my portfolio needs to be full of stocks like that on the long side. And on the short side, you can start kind of leaning against companies. RH is one we've talked about, super high end, tons of debt coming due. They're basically have levered themselves into more and more luxury, more and more expensive stores with fewer and fewer sales. As long as these tariffs are going to be in their face, as long as that's going to be a headwind, it's going to be really hard for that stock to work. There are just companies also that they just need everything to go right. You take Signet Jewelers, they have a monopoly on the cheap jewelry business. Now, they need the world to become a slightly more romantic place than it was last year, and they need everyone to forget that lab diamonds exist for that company to succeed. Otherwise, it's just going to be a matter of the economic headwinds. When they're blowing, that company is going to be a natural short. And when times are good, it's going to be over shorted. Shorts don't go in a straight line down. You play them in terms of you're going to get your best returns over the course of maybe 30, 40% moves like we've seen over the last month. This is not a time to be initiating new shorts. It's a time to be picking longs that you're willing to kind of go to the grave with and just get long and not maybe look at your P&L for a week or so.
One of the most interesting concepts that you bring up is when, you have this massive behemoth and, losing 3-5% market share in that massive behemoth. The company that's taking that market share is so much smaller. Now you're looking at a 3-bagger, 5-bagger, right? You're looking at monster returns from just eating into these behemoths just a little bit. The best example that I've seen you give me is On Holdings and Nike. Can you explain, guys, and listen, pay attention to this because, this is like, again, for somebody like dumb like me that knows nothing about this stuff, I can understand that. This massive company loses a little bit of market share to these smaller companies, but what that does to the price of those smaller companies shoots it up in the air in ways that the behemoth simply cannot, right, Jeff?
Oh, it's the On Holdings has been one of my favorite sleeping giant trades over the last few years. Part of just this package is getting long almost any athletic shoe company except Nike. And the reason is Nike's a $55 billion corporation revenue, just enormous, down from 60 billion. They might do 50 billion next year. It's a big, big, big company. On the other hand, is about $2.5 billion, and they're growing at 30% a year. And they're doing it at incredible margins. And they're doing it only in shoes so far. So Foot Locker on their call the other day, they mentioned in the highlights, of course they would because nothing else is really working there, but they're still selling On shoes at absolute full price. It's also one of those, we talked about seeing what's around you. This went from being kind of the hot mom shoe, the official shoes of hot moms in like the summer of 2024. From that, it became something that kind of dads were wearing over the winter. All of a sudden last summer, my son, who's a college athlete, is asking me for Ons. He's like, these are the best running shoes. Holy crap, I've got 3 generations of people buying shoes. If the hot moms and the college runner kids are wearing the same types of shoes and they're selling for $300 at full margin, this is a company that I can be long. This is a company, I don't own them because I thought their last quarter was going to be terrific. I own them because they just might, if everything goes right, be the next Lululemon. This could go from a $3 billion company to maybe 12. If they figure out apparel for them grew at 78% last quarter, JC. And that just comes from Nike. If Nike loses $1 billion in sales, well, that would be 50% growth for OnCloud if they took the entire market share. They didn't take the whole market share, but they didn't need to. They just need to take the most expensive lanes at the local Foot Locker. They just need to get into Dick's and be able to sell the most expensive, nicest shoes that you can possibly buy at Dick's Sporting Goods are going to be Ons. That's a huge margin business, and it all comes from just Nike slipping up a little bit. Just these enormous behemoth companies that slip up a little bit. Now, when that trade reverses, as we're seeing with like a Starbucks right now, where the price action's been great, you figure tariff company, Chinese exposure, that company shouldn't be working. Nike shouldn't be working, but we're slowly seeing the momentum change, the worm turn on kind of this eroding giant story. And then you have companies that have a little bit of pre-pricing shock built into them. And you can start thinking about the yin-yang trade the other way. Maybe it's time to start betting on the sleeping giants a little bit and let these kind of high flyers rest for a while. But in the meantime, it's a basket of stocks. I love the idea that on can be all they do have to do is kind of, it's that old joke about if you and a buddy are getting chased by a bear in the forest. One guy puts on running shoes. His friend says, "We can't outrun a bear. Are you crazy?" Looks at him and says, "I don't have to outrun the bear. I just have to outrun you." OnCloud doesn't have to beat everybody. They just have to outrun Nike, and they're going to be taking share. They're going to be growing twice as fast as anyone else in the space. And that's magic sauce. That's a consumer stock you can be long.
All right. So now this is where I like to come in. I want to know how the sausage is made. And if you're listening out there and you're like, everything Jeff is saying is great. Yeah, all that makes perfect sense. Now, how do we do that? Now, let's talk about the actual process. We've all listened to conference calls over the years. For me, I just never know what to look for. Like, I just don't know anything about that stuff. So I don't really do that. When you listen to conference calls, like, what are you looking for? Like, or listen, what are you listening for?
I'm listening for the people who can synthesize a complicated consumer idea as simply as possible. I want bullet points from my guy. My old man, who was a CEO, and he was a good CEO in the stores, a really good one in the stores. The corporate politics stuff, he didn't have a hang of. But man, he would go into a store and he would say, "I can only stand for one or two things, Jeffrey. We have 500 targets. I need to create a little bit of a legend. I need people to talk." And his thing was cleanliness. And he would say, a dirty store says F you to the customer. He would go crazy about if a Target was dirty, the store manager would be in so much trouble. And then he'd leave and he'd say, "You know what? I know I seemed a little crazy, but I want those store managers talking to each other saying we need to be clean. That's our number one thing. We need to be clean." What I want from a good consumer CEO is that type of thing. I want Disney to be dedicated to creating magic. Starbucks is doing a turnaround. One of their core missions is to serve coffee in 4 minutes or less, from the time you order till the time you pick it up. I can measure that myself. There are 40,000 Starbucks. I can go to every single one and time it myself and see how they're doing. Everyone in that chain knows and is fully aware that their job is to get the coffee in the customer's hand within 4 minutes. That's a beautiful CEO job. That's a great leadership job, and it's coming just at the right time for a really complicated turnaround story. They're simplifying it, and they're giving the entire chain deliverables, and then they're going online. The consumers get to see that too. And so they have to walk the talk, and consumers will call you out on it. You better be doing what you're going to tell them.
That's really fascinating. So you're looking for like a key objective that they're telling essentially their consumers and their employees, this is our mission. This is what we're doing, huh?
When you get them out of alignment, it falls apart right away. The last Starbucks managers, they were measuring how many people were using the app. Now, everyone hates the app at Starbucks. So leaving aside the fact that, are you sure that measures your success? They would say, no, people love us. You can tell because we had 12% app adoption, which they got by not letting you pay cash at the Starbucks. 20% of the customers were actually leaving before they picked up their app order. So their app's a flaming disaster, but they think it's just fine because they forget that they're running a consumer company and they think they're running a bank. People can go other places to get their coffee. They don't necessarily want to. They'd rather just go to Starbucks, but they can have plenty of choices. You got to focus those businesses on the consumer. It's amazing how easy it is for these companies to forget that that's really what their job is to appeal to as many people as possible on every possible turn.
All right, guys, we're getting it out of them. Step one, we're analyzing the management team, and do they have a specific purpose, and they're doing things with intent and in a very simple to explain way. Okay, great. Now that's from the management standpoint. Now from the consumer standpoint, right? So you're looking at it from two different perspectives. I respect that. I like that, Jeff. I like that a lot. So you're looking at it from the management perspective, and then you're looking at it from the consumer perspective, from the other direction. And you're not a retail analyst, you're a consumer analyst. I love that, by the way. So talk to me about how you think about the consumer. I mean, is it as simple as teenagers and hot moms and whatever they're buying and we're buying it too? Nope. Like, how big is that universe?
It's a two-step process. You got to know exactly what a store is trying to stand for, and are they giving the customers just a tiny bit more, just a little bit, a whisper more than they would expect. Walmart has been a straight shot. That company for the last 12 months has outperformed every single Mag 7 stock. And one of the main ways they've done, there's a lot of different reasons, but if you go into a Walmart now, it's just a little cleaner than you think. It's just a tiny bit nicer. If you go into the grocery department, it's just a little bit better than you'd expect. Now, if you're a Whole Foods guy, you're gonna think it's a dump. You're not gonna understand. If you don't understand what Walmart's trying to be, you can't grade how it's doing against what they're really delivering. On the consumer stocks, I want experiences that just kind of come in a little bit in front of the line. You go to Disneyland, it costs every penny in your wallet. I mean, it's just an absolute, it's a dad wallet vacuum. Every dollar is gone, but you have a magical time. They deliver the magic in the parks. Whatever you think of them, they deliver the magic in the parks. That's their deliverable. People understand that, but they don't understand how to put that in the context of, say, a Ralph's, or say, you go into a discount store. They're not going to treat you like you're at Saks Fifth Avenue, because that's not the way the business works. You have to understand with these consumer companies what they're trying to do, and then you grade it against your expectations. And the ones who deliver a little beyond, just a tiny step above what you expect, well, they're the ones that generally win.
So the company needs a very specific mission, and everybody needs to be on board. Then based on what that mission is, you're judging whether they're able to execute on that mission or not. Like, this is, guys, are you listening? Like, this doesn't sound that complicated. I can understand this, right? Okay, so management needs a mission. Great. Are they getting the job done or not? Great. And now the technicals need to add up, which is why I actually respect you. If you just stopped there, I'd be like, now you're getting down to the part that actually pays anybody. Because all that stuff is all hypothetical, theoretical. Now we're in reality. Now we're in practice. Now, does the market agree with your interpretation, right?
Sometimes the market's not going to agree with your interpretation. Sometimes you're just going to be wrong about the product, and it's not going to have any appeal at all. And somewhere there's a guy that's like, yeah, I made the best damn water beds the world's ever seen. I was the king of water beds. They always ranked the highest, but it turns out water beds are a crappy way to sleep, and no one likes them. There's a guy selling corded phones out there that's the best one. You're not looking for just you need something with a broad appeal that's actually going to capture that real zeitgeist. That's where you make real money in this business, JC, is you catch the Abercrombies when Abercrombie gets hot. When suddenly they go 4 or 5 quarters in a row where they're on top of the fashion cycle like nobody's business, and they're perfect. But on a day-to-day basis, you just have to make sure that they're finding their consumers and they're not losing market share. You have to keep everything in the context of share. We were talking about shoes with a friend earlier, and we were just talking about these ideas, and he's like, naming dress shoes and stuff. And I don't care who makes Johnson and Murphy's. I don't care who makes the nice, expensive, kind of lace up dress shoes that you would wear to the office, because no one's selling those anymore. No one's buying those shoes. That's a headwind that you can't have any part of. It only applies to athletic shoes. You need to have some consumer appeal built into the product before you get anywhere. Eventually it just sort of runs out.
And the price of these stocks will notify you of that. It's how I think about it, right?
Yeah, generally speaking, for the most part, if you're buying an expensive stock, On is a great example. We've mentioned it a few times, and people are going to think we're Swiss if we talk about it much more. But that's an expensive stock. They need to be crushing it. They need to be absolutely nailing it all over the place. It's another name that I'm like, Build-A-Bear Workshop, unbelievably cheap. 10 times PE. You say Build-A-Bear to someone, you've probably never even heard of it because you were in the exact wrong window. But Build-A-Bear was it was an unbelievable Saturday morning cartoon express type of toy company. For about 5 years, they largely disappeared and became a micro cap. That stock has been an unbelievable performer.
That's the only reason I know them, by the way, Jeff, is because they've been an unbelievable performer.
Because look at that freaking chart, right? I mean, talk Texas Roadhouse as well. We both kind of came about that, where it's like, I don't know if either one of us has been to a Texas Roadhouse, let alone to a Build-A-Bear very recently, but you look at those charts and something's going on.
And that's the whole thing. So it's the Build-A-Bear. It's the Texas Roadhouse, which is hilarious, which they got some operation there, that Texas Roadhouse. Even me, who I'm not like obsessed with this stuff like you, can appreciate, the operation that these guys are running, and the stock certainly agrees. Just generally speaking, guys, if you're listening to all of this, you hear all about all these winners, all these losers. What that really translates into is that now we have a way to approach the market with an additional strategy than to what we're already doing, right? So what I love about Jeff and what he's bringing to me personally as an investor is an additional strategy that I can add to my arsenal as somebody who has been building wealth for decades now and, investing in Wall Street and trying to make money, like I am looking for additional sources of revenue and income that is not correlated with all the other stuff that I have where I have long portfolios, I have real estate, I have retirement accounts. Like I got plenty of stuff going on. I'm looking for different things. And this is that. Ray Dalio's famous for talking about the Holy Grail, of course, which are all the additional strategies that you're adding to the portfolio. What it does is it lowers the overall volatility of your portfolio. You're not sacrificing forward returns at all, right? That's not what diversification is. So you're not sacrificing forward returns and you're lowering your volatility. What does that mean? That just means that you're able to make more money faster. That's what I like, right? And this gives us that. This helps us as traders, as investors, the ability to make more money faster. Like, hello, that's exactly what I want. So that makes me very excited, Jeff. Before we wrap here, I want you to explain to the folks how you divide some of these, segment some of these types of stocks, because this is fascinating how you do this. We have, I used to think we were creative in the way we did things, and then I see how you're doing things, and I'm like, whoa, Jeff's on a whole nother level. So guys, pay attention to this, because this is really interesting. This is cool.
We mentioned Disney, we mentioned Build-A-Bear. I wasn't even thinking about those terms before, but you're right. Those are two stocks that I clutter in the exact same basket. They're father-son stocks, basically. They're parent-kid stocks you can sell to two generations. Abercrombie got hot with that. They're companies that appeal to parents, and I tell you what, that multi-generational, the boomers are taking their grandkids there type of appeal. Man, you can charge top dollar for that. Unbelievable margins there. There's the cold dead hand group, companies that would be, they're selling products that are the last thing folks would give up in any type of consumer pullback. Amazon Prime being an unbelievable example. They took that from a product that wasn't even really a product to a thing that customers just would simply not give it away at this point. There is no world in which we're not going to be using Uber to hail cars for the next multi-decades. I don't care how they do come up with autonomous driving. They have the best interface. They've got all their information. They've got all their IDs. Netflix, that stock got absolutely slaughtered today. Last thing anyone's going to cancel. Spotify, it's all we listen to. And so, you stick with names that are actually part of the vernacular, part of the social construct. Again, these are not things that last forever, but as long as it's, Facebook has had an awful long run, kind of being able to morph from one thing that everyone uses to another. No one has to love it. No one has to be this is the biggest passion of my life. But as long as it's providing that utility, it's a really powerful kind of cash on cash return. And then there's the forgotten survivors, which is
I love this one. I love this one.
This has been the best post-COVID trade. This entire basket of stocks that people just left for dead. Etsy got too expensive to catch there. They're not beaten down enough. But you look at the Real. You look at Stitch Fix. They report this week. Peloton.
My sister works at the Real.
Really, and they're really there still. Right? I mean, it's we did a ton of shopping there. It's like, this is an absolutely incredible market. This is precisely a thing that should exist. Chewy is another one. All these COVID things where that stock went up to 300 something or give or take, when the conventional wisdom was that people were never going to have kids again and we were all just going to have like puppy children. That was obviously lunacy, but the stock fell 95%. So I'm buying it back. That works out pretty well. Rent the Runway, Peloton, again, it's a joke to so many people still. It doesn't deserve to be a joke anymore. It has an unbelievably loyal customer base, and they're going to be generating $500 million a year. At $50 billion, it made no sense. At $2.5 billion, I'm pretty interested. I'm also a pretty good Peloton rider, so it works out well, JC. I kind of win either way.
No, I love it. And what's going to end up happening here, which is quite obvious if you're paying attention, is that you're going to get these big cap names, right? You're going to get like household, like the McDonald's and the Disneys, right? But then you're also going to get some names that you wouldn't think about when it comes to the consumer, which I think is really cool because you're thinking about it in a different way. And then, of course, just kind of like the ones that have gotten crushed and maybe are working their way back up, which is always a place that I'm interested in looking. So all of this is in Jeff Macke's portfolio, which is awesome. So now we get to see in real time what Jeff Macke is doing in his portfolio, like literally the stocks, the consumer stocks that he's buying and even some of the ones that he's shorting. Jeff told me the other day, and correct me if I'm wrong, Jeff, we're looking at about roughly 80% of the time, these are long positions, and maybe closer to 20% of the time, there'll be some short positions. Is that right?
And most of the pessimists I meet are poor, to be kind of blunt about it. It's I like to skew things to the long side, but I'm not immune to taking a shot against some of these things. And it's they may not be the scum of the earth type of companies, but again, there are companies that just history is not on their side, and I like to keep a little short in there just to kind of keep things calmer on the volatility side, keep things
Yeah.
mellow on weeks like this.
No, I like that. And you mentioned a few names that I was already looking at, and I'm definitely going to get there short there with you. So I appreciate that. These bonus trades are going to come every single week. This is for Macke's Retail Roundup. I love the fact that you're going to do a weekly portfolio review looking through the actual live portfolio, talking about what's going on, taking questions from the audience. Of course, Jeff's custom indexes, which are great. You're preaching to the choir here. I love the custom indexes because it gives us a way to look at the behavior of certain types of stocks that we don't have in traditional indexes because nobody's bothered to build them. But since we have the technology, we can do that. So I appreciate that you're bringing that to the table. And of course, listen, when it's earnings season, Jeff, this is like, where you really shine, in my opinion. You're able to give us a heads up as to what to look for in these releases. And then after the fact, is the market reacting how it should, or is there an opportunity there? And there's nobody, guys, if you're listening to me, and you're here, I certainly appreciate you taking time out of your day to be here with us. But I'm telling you from the bottom of my heart, when it comes to the consumer and consumer stocks, I don't really care what anybody else has to say. I want to hear what Jeff Macke has to say. That is from the bottom of my heart. So, as a founding member of Macke's Retail Roundup, this is sick. So it's $24.95 for Jeff Macke's portfolio and everything that comes along with it. You're able to get it today for $9.95. That's a pretty sweet deal. It's a low price and something that can really add a lot of value throughout the year, not just during earnings season, but in between as well. And all of that portfolio is in rangefinder. Spencer confirmed that with me today. And Spencer, can you show them what that rangefinder looks like so they can see all of the trades with Jeff's annotations, like I said, in real time? And then you're able to see where these trades are based on the best entry point, according to Jeff, and where it is relative to the price target, right? And that range that you're able to see in real time gives us the ability to participate either from the long side or from the short side. So, Jeff, anything you want to add to sort of the list of, sort of services, premiums that, someone.
You know what, JC, I'm approaching this like a consumer product. We're taking something that's a little wonky. No one wants to know how the sausage is being made for the most part. I'm going to help digest it for them, help kind of just process and understand what's going on out there and deliver just a tiny bit more than what we're promising and what we're selling, and kind of let the word of mouth do the work for us. And so we're taking the financial world, coming up with something with a consumer spin. And that's really how I'm looking at this, is just a way to talk to people, help them out, help relate to a new customer base, and try to help them kind of formulate their thinking in a way that's really served me well for the last 30 odd years.
Guys, click the link if you're watching live. Click the link below to join Jeff Macke. Listen, not only are we getting the trade ideas, not only are we able to see literally your live portfolio in real time, to me, the color itself adds a lot of value. Listen, the fact that we get to see your portfolio and see what you're buying and what you're selling, that is fantastic. But in addition to all of that, like the themes that you're bringing up, like in this case, all the tariff stuff, who are the winners, who are the losers? For someone like myself who doesn't know the first thing about tariffs or politics or geopolitics or any of this stuff, like, great. So what parts of all of this stuff, how does that affect me? What do I need to know? And being able to have someone like yourself to turn to and be like, Jeff, can you explain to me why this matters to me? What's at risk? What stands to benefit? Right? Like, that adds a lot of value, guys. So, if you're out there listening, I could tell you, listen, I'm not new around here. I've met a lot of investors and traders over the years and all kinds of stuff, oil and gas and venture capital, you name it. When it comes to the consumer, retail's a part of it, but when it comes to the behavior of the consumer and figuring out ways to monetize that, there is nobody on the planet that I want to talk to other than Jeff Macke. So much so that I couldn't even tell you who number 2 is. Like, I couldn't tell you. Like, Jeff Mackey's number 1, and like 2 and 3 are so far down the list. I swear to God on my life, I can't even tell you who they are. It doesn't matter. Jeff's the guy.
Maybe we'll put together a trading basket, JC. Hey, thanks a lot, man. And thanks to the folks at home. Let's kind of figure this out together. And, I'm looking forward to interacting with them and hearing what they have to say and kind of answering their questions and helping them make money and maybe avoid some losses they don't have to take.
That's a fun part of all of this, in my experience, for sure, is the Q&A. You're going to get some amazing questions, Jeff. I promise you. Over the years, our audience at All Star Charts, everybody, the whole team on Stock Market TV, bringing everybody together and doing this. I can tell you the questions we get from this audience are so, honestly, they're bringing me ideas. That's really the truth. You know why I own On is because we were trading the stock and I had no idea what it was, and we were making money, and our customers were like, busting my chops. They're like, "Oh, JC, you don't know Ons, bro?" And I'm like, "I do now. We're making all this money. School me." And they're like, so I ordered the pair of shoes of On, and my wife's like making fun of me. She's like, "Do you really need another pair of shoes?" And I was like, "No, this is research, babe. This is research." Next thing she's like, "Well, can I do some research too?" So she buys a pair. She loves them. She's on her 3rd pair. But,
I bought a pair during the earnings call. I was so thrilled. I heard their apparel number. I was like, I'm 78%. I could use some sweats. That's what I could use, is some sweats and a nice pair of Roger Federer shoes.
I'm going to do the same. Nice. I'm going to do the same. All right, guys. So here's the homework. Ready? So you click the link below. You sign up for Mackey's Retail Roundup. You go to On, right? And you buy some apparel. I'm going to do that. I'm going to have my wife buy some too. We will share our experiences with you, Jeff, so you can use that as part of your research. And, you can share it to the folks. So what should I buy? Pants? Is that what I'm buying? Pants?
Yeah, buy the sweats, because that's going to be the key for them. If they're going to be the next Lulu, it's going to be because they've figured out clothes. So we'll be smartly clad in our Swiss finery, making some money, having some good times. I'm looking forward to this.
Love it. And guys, just as a reminder, $9.95 for the year to get Jeff's portfolio. You're getting all of the new trades every single week. Of course, the portfolio review and all of the Q&A. I think that adds a lot of value. And remember, this is risk-free, right? So within 30 days, you decide that this is not for you, full refund, no questions asked. So you literally have nothing to lose. And in my opinion, both a lot to learn. I know selfishly, I'm looking forward to that part. But of course, the money, right? That's what we're trying to do at the end of the day. Learning is great, but let's make some money. And having a strategy like this that's uncorrelated to all the other things that I'm doing, Jeff, to me personally and to my family, adds so much value. And for that, I thank you. And those of you listening out there, join me in diversifying our portfolio, and I will see you in there.